Really sorry. I just observed that my mic has been muted and I've been speaking for quite a while now. So I said I want to welcome you all specially to today's review session. I'm going to go back to the 1 week time frame so that I can repeat all I have said already. I've been saying so much. I didn't know my mic was muted. Thanks to those of you that dropped a message on the group. Okay. All right. So quickly, I said we took this counter trend line and then this trend line on the 1 week time frame where we start our analysis from. We took this trend line and then this counter trend line. Then we took price action for 1 week time frame to help us spot all our movements in the market. Then we came to 24-hour time frame, of which the trend lines were still very valid. All we needed to do in this time frame was to take price actions. Okay. After that, of course, I said we took the buy stop, the closest buy stop liquidity from 1 week time frame and sell stop liquidity to help us know what these buyers will be. And then on the 24-hour time frame, the liquidity was still very valid. As you can see, this is a pure trend. So this counter trend that is building is basically if after making all the reactions it will make at this other block, it might most likely find its way to this equilibrium before disabling this order block to go to this buy stop liquidity. So the 4-hour time frame, I said we spot trends from higher time frames and then spot entries from lower time frames. So from a higher time frame like this 4-hour time frame, our work is to spot the trend. Okay, so from this 4-hour, we were able to see the trend. Where is price? Price is currently on the premium. As at the beginning of the week, premium was just about this point. So spotting premium at that point was what enabled us to be able to find our entry. We had premium here, okay, on 4-hour. We had it on 1-hour. Premium was also at that particular spot, which is here, okay. Then on the 15 minutes, we also had premium on that same spot, okay, which is just about this point, just after the psychological level. And then on the 3 minutes, we had premium on that same spot. And then on the 1 minute, we had premium on that same spot. Okay. So in that case, all we needed to spot was the strong high and weak highs. From the 4 hours, it was indicating weak high, letting us know that that premium was not going to be there forever. It was only going to be a little bit of a movement. After which the movement will change direction. Okay, so but what movement is it going to be like? So looking at this, you see that this is a pure uptrend. There is a break of structure, and then there was no change of character. Take note, this change of character is for this level. It's different from this main change of character. The main change of character can only be formed when this one breaks this previous low. Okay, so it's purely break of structure on this side. On this side it was change of character. Then on this side it was break of structure. On this side it was break of structure. So this is a pure uptrend. Okay, so that will make you know that if you're taking an entry, in this case, you are actually against the trend. So what we were spotting was, being that this is a higher time frame, is we're trying to pick this little trend. This is also a trend. These are trends. These are trends. These are trends. So that was the trend we're trying to pick from that premium. Why did we do that? Because all the price from the time frames from 4 hour down to our entry time frame were clearly showing us that we were on the premium, and premium is usually the best price. Now, of course, the indicator that gives us premium, which is the smart money indicator, sometimes it lags. What do I mean by lagging? Premium was here, right? How did it get here? That's the lagging we're talking about. So the indicator will keep changing position. So, but how do you know that this indicator will stay for a while before it changes? Is when it repeats multiple times in different time frames, and some of the time frames are on a strong high. Okay, for this case, because we're talking about high. For low, on a strong low. Okay, if it was on a weak high, anything is possible. Anything is possible. So we do not take entry immediately on weak highs. And let me show you something. If you come to 1 hour time frame, you see that it's on premium. Okay, close to a psychological level. If you come to 15 minutes time frame, you see that it is on premium, weak high. Okay, close to a psychological level. If you come to 3 minutes, you see it's not on premium. See that in this case, the situation is different. That's why I thought to show you this. Now, if you look, you see that premium is a bit far. Price has broken equilibrium on 3 minutes. Price is currently going to strong low. Now, this price must break this strong low before we can be able to decide. We can't enter this trade, particularly at this time. This is why I tell you the indicators lag. So you have to be able to understand what movement is going on in lower time frames before you know what will react on a higher time frame. So because this price will come to a strong low, which might most likely push the price back to a weak high, which might most likely break the weak high and shift the premium to a higher position. If you take that entry, you are most likely going to be hitting your stop loss. So you have to be very careful with that. If you go to 1 hour, you see that it is not on the premium. In fact, 1 hour is already on discount. And the discount which I can see is a weak low. It's a weak low. Weak low or strong low. Discount is the best price. If this particular discount will not be the best price, it might just lag a little bit to the psychological level where the institutions and the banks will drive the market. So these markets will most likely still tend from this level or from this order block, trying to fill up this fair value gap if any change of character is formed, which I can see already that if this breaks this level, there will be a change of character here, which will take this price back to this point of interest. Okay, so most likely this price will come back to a strong high. So this is actually how we were able to spot those entries. But those who have been asking me, how do you spot entries? How do you do this? How do you do that? I'm taking time to explain all of these things in these particular review sessions so that you can be able to understand how we're able to do it. Okay, so I go back to that 4 hour time frame. That was how we spotted that trend. So now, how far will that trend be? How far? You might not be able to spot that, but look at how we were able to spot it. If this is a premium, and equilibrium is just here, okay? All I need is a change of character, of which I saw this change of character from equilibrium. So I was expecting that when price is able to find a good bearish point, price might come back to equilibrium if it breaks this order block. That was how I was able to predict that this price will exceed the first psychological level, most likely exceed the second psychological level, and go straight to the order block. That's why my take profit was directly on the order block. Okay. And also remember that we have the buy region for the week, we have the sell region for the week. If you see that price has already done what it will do on the buy region for the week, and price is directly sending itself into the sell region. Okay. So I will not be looking at for buys because of the direction price was given on these high time frames. Okay. Before it got reacted here. So what do you learn from this? You learn that even though you have caught a trend, you cannot hold that trend blindly. You have to on a lower time frame where you make your entries, find break evens and areas where you should take profits. Now, I'll give you an example. Anytime you are trading as a day trader or as a scalper, whenever you have hit 8 to 15 pips, you should be able to take profits or break even. That helps you to be able to manage your move so that in case price begins to change, between 8 to 15 pips, you should be able to take your profits. So what does that give you as an analysis? It gives you a pure and a very clear analysis that since I'm going to be take profits from levels as I'm going to be taking profits at levels as I'm trying to share my position calculator. Just give me a while. It's up already. So I'm going to move from the trading view app to Pips position calculator. Okay. All right. So I'm now on the position. Okay. I'm now on the position calculator. I want to show you something. I want to show you why most times you don't hit your targets. But daily with GBP USD, if you do other currency pairs, you can try this. But for us, we are sticking to this. Now, let's assume you are trading a $5,000 account and you're risking, your targets should determine your risk. For a prop $5,000 account, you should be able to hit $400, which is 8% of the capital before you pass this account for a bi-weekly account. Okay, dealing with consumer traders. So what do you do now in this case? 400 is 8%. Now you can't go for 8%. Let me show you what 8% means. Most times I take 10 pips for stop loss. Let me show you. Can you see 8%? 8% means that you'll be losing $400 on this particular trade. And your standard lot will be 4. 4 standard lot is too much for a $5,000 account for one entry. So what do? If you're entering this trade with $400, what you're basically doing is you are telling AI that you are not interested in this account, and AI will come for the account because already there is a drawdown telling you that you can only lose just about $280 something on that account for that day, and your overall drawdown is $600. So you can't be risking 400. AI will not be pleased with you for that. So come down to 3%, calculate. This is what you should be risking, half of the daily drawdown. Okay, so what do? Don't plan to win the account the same day. What standard lot can you see? 1.5. What is the stop loss? 10, right? So if you take a trade, I'm going back now on trading view. And repeat the same thing on smaller accounts. For those of you that like to trade $50, $100, just make sure you put the account size there. If you're going to take a trade from our entry point, which is 15 minutes, let me take for instance, like some of you that see me posting only one trend throughout the week. It doesn't mean that I don't catch some moves like this move. I usually catch them. I use them to scalp. Okay. I catch some of these moves. I use them to scalp. If you look in this trend, you see that there were 2 entries I caught. I caught this entry, but it didn't go very far. Then I caught this entry. Now let's take that first one as an example. From here to here, it's 13 pips. Okay. Even though this trend did not go far from this entry point, it gave me 13 pips. 13 pips is enough for me to hit my target for the day. I don't need 50 pips. Remember that one psychological level to another psychological level is 50 pips. I don't need 50 pips to hit my target for the day. 13 pips is enough. Look at it. 10 pips loss is what? 150. What will be 13 pips? Let's change this to 13 pips. Now, not that we will put our stop loss at 13 pips. Take note. I just want to show you what 13 pips will give you. 13 pips on a $5,000 account will still give you $150. Okay? So change it back $10. Okay, I did not share that. I did not share that. Let me share it quickly. Okay, I think it's up now. I said 13 pips stop loss, not 13 pips stop loss. I don't want to show you what 13 pips can do. 13 pips can give you $150. How much do you need to win the account? You need just about, turn on my calculator. Then I'm going to share the calculator. With $5,000 account, you need just about $400, right? To win it. Okay? If you give yourself a target of $150 every day, and you achieve this for only 2 days, you have won the account, right? 300, many hundred to win. That's why I said you have won. What I mean you have won is for the third day, you don't need 150 again. Just with 100, you have won. That's 400. Then if you do 150 for 3 days, that's 450. You have exceeded your target. This is the best way to target when you are trading. Okay. Let's go back down to review. I just use that to show some of you that usually wonder, how do I make some decisions in the market? So because of that, I don't need to target 100 pips. If I get 100 pips, beautiful. Like from here, okay? I take this trade from here. I hold it onto this point. That's 24 pips. That should be more than 24 pips. Let me take it again. From this level, no, it did not touch. From this level, not touching. I'm wondering why. From this level, it's close, but not, did not still touch. To this level, it's 50 pips. But it didn't touch the next cycle level. It stopped about here, which is about 40 pips or 42 pips. That alone is a good number for you to even say you are not trading for the week again. Let me show you the results of 42 pips. If 10 pips or 13 pips will give you $150, 40 is times 4 of 10, right? So what this should give you, let me put 2 pips, right? Okay, the amount at risk percentage is not changing because of this. So you cannot calculate it like this. Still leave your risk on 3, leave your stop loss on 10, okay? Let it still be 150 like this, eh? So it's now you use wisdom now. You go to your calculator. go to your calculator and now check, okay, if I'm losing 150 for 10 pips, that means if I'm gaining 150, if I'm gaining 10 pips, I'm gaining 150, right? Now I have now gained 40. That's times 4. That's 600. So that means you can actually win the account the same day with 40 pips. So I said our targets might not be $600 for the day, but if we see $600 opportunity, because these opportunities come in sometimes and we're able to enter, we go for it. That's how all these trades were done. I took this one from here, took this one from here to this psychological level. Sorry, let me draw it again. Just about here. Let me draw it from the top. I don't know why this thing is not okay. To this point. That's about 21 pips. That's a lot of money. That's times 2. That's $300. So give me one reason why you will not win prop accounts or why you will not make money. Then imagine catching from here to here, which was our trend spotted. Now let me show you what I did during the week. Each time price comes back to cycle level, I take an entry. Each time price comes to cycle level, I take an entry. So cycle level was my major factor. Each time price came to cycle level, I took an entry. Each time price came to cycle level, I tried to, but this bullish move here is a clear indicator that price is about to go bullish. So this is not a good place to take entry. And this was already Friday. So with all that the profit you have made here, taking this trade will be greed. That will be greed. Okay. So from the 1 hour time frame after the 4 hour catching of trend, we can just see clearly what we caught. We took trend lines also here just to see what's possible. The price actions we took also as well. Then we went straight to 15 minutes, which is our entry points, and then we spotted psychological levels. So from the current price, okay, we took psychological level upward and we took psychological level downward, okay? And I already told you how we take entries. So I already told you how we spotted this beautiful trend, okay? You might be asking me, how did I take this entry? Before I spotted this trend on a Monday morning, I was able to take this entry because at this level, this was the premium for 15 minutes time frame. It was when he moved from this level to this psychological level and stayed for a while. That was when we were able to now spot this trend. It was first at this level before it moved to this level. Okay. So when it was here, I was anticipating a scalp move that might come to this level. But remember, I am in the buy region for the week. So I'm not looking for long sales. I'm looking for short sales and long buys. Look at it. This was a short sell. This was a short sell. This was a short sell. And this was a long buy. Okay. Except for where there is a major reversal where the sell went like this. And this was a news. If you check very well, you see that this was news. So that was how we're able to make these entries. So I'm going to try and see how I'm going to do the class. I have another meeting for 9 a.m. So I'll be closing now so I can go straight to my meeting. So there will be a class by meeting ends by 10. I'll see if I can shift the class to 10 because I have an event to attend as well. So let me see if I can shift the meeting to, uh, to 10 o'clock. Sorry, the class. Otherwise, there will be no class for today because I have a very tight schedule for today. But I've basically shown you how I make all my entries in everything that I've said. So you have to look at 4 hour for the trend. Okay, just a little bit of review. Okay, then you have to look at 1 hour. for the trend as well. Just a broken level of the trend. Okay. Then you have to look at 15 minutes for your entry. Okay. But you're not in a hurry to enter. You look out for the entry, but not yet in a hurry. Just like right now, you can see it's on a weak high, right? You have to now go down to 3 minutes. Look at my time frames, please. I did not say 5 minutes. These are the time frames that work for me. You can use 5 minutes if it works for you. On 3 minutes, you have to now look at where price is on an order block. There is a change of character and there is a psychological level. This is not a good entry. For those of you that make bad entries, you can only enter this trade when price is at the weak high. Now, let me show you what I mean. See it here. So this was a beautiful entry. And if you close here, it's a good place to close. Don't catch everything. This is scalping. This is just 9 pips. When I did a calculation for 10 pips, did it not hit your target for the day? So you can see that the reason you're not hitting your target is because you're not getting good entries and you're not calculating and giving yourself proper targets. If you do what I've taught you so far in this particular review, next week will be more profitable than this week. So that's how we spot the entries. We did not just stop at 3 minutes. We still go to 1 minute. So 1 minute defiles 3 minutes. And we're like, okay, fine. I'm seeing price on premium. Maybe I should sell from what I'm seeing in 3 minutes. What is 1 minute showing? 1 minute is showing you that price is coming from a strong high, has passed equilibrium, giving another block, forming a fair value gap, giving a break of structure, indicating that price will still give a trend, a downtrend, before a reversal. Reversals only come with change of character. It doesn't come with break of structure. So what do? You have to wait. That's the patience in trading. Let this price finish what it's doing. Let it be done with the weak low. Let it at least get to an order block or the cycle level and give a different move. If on the weak low it begins to give a bullish move, you can take a bullish entry. But at that point, you're able to see your bullish entry from the 1 minute time frame and from the 3 minute time frame, the directional bias, where that bullish entry is going to, and be able to scalp and take your profits and get out of the market. Never enter any trade that is not on premium or discount. Never do that if you don't want to be losing trade. If you don't want to trade, it will always lose you. Then I'm not saying that if you enter on premium and discounts that it will not hit your stop loss. It will, but you are on a greater chance of winning most of your trades. That's what I mean. So see you by 10 a.m. I gotta go now. See you by 10 a.m. Thank you so much for joining this review session. I hope you learned something. See you by 10 a.m. for class. So in that class, you'll be able to have an interactive session. You can ask questions and you can say a couple of things. All right, see you then.